Ladies and gentlemen, welcome back to the channel. It has been pretty clear that Tesla stock has been experiencing a pretty dramatic short squeeze. Now, we are going to get into what's going to be happening this week. You have the holy grail, or should I say, the Super Bowl of economic data coming out next week on Valentine's Day. Happy Valentine's Day to all. The markets are going to move dramatically, so hopefully you are not on the wrong side of that move. We're going to get into, long story short, everything you need to know about the markets, what's going to be happening, when it's going to be happening, as well as Tesla stock. And fun fact, the US just shot down its fourth high-altitude object as lawmakers demand more information. So, with that being said, guys, let's get into this video. The only thing I ask you to do, since the Super Bowl is coming on right about now, is to let me know the Eagles or the Chiefs down below in the comment section. Now, let's not waste your time. Let's get into this information. So, first things first, we're going to start with the economic calendar because that is going to be the most pressing event for this week. And definitely clicked off of it. So for Monday, all you're going to get is Fed Bowman that speaks at 8 o'clock in the morning. Not going to be a huge deal because on Tuesday, on Valentine's Day, that's when you get at 8:30 in the morning the inflation rate year over year for January, as well as the core inflation rate year over year. Now, I kind of want you guys to discard these two sets of data because the year over year numbers, it's not going to be a huge deal. Essentially, what inflation was in January of 2021 compared to January of 2022. We all know it was high. There's probably not going to be a big move in these numbers. In the grand scope of things, it does not matter. The markets care about how did inflation go up or down from December to January, especially since this is the first inflation report for 2023. It could say a lot. So for the core inflation rate month over month, also coming out at 8:30 in the morning, just so you guys are aware, we are expecting a 0.3% increase. Last month for the month of December, the core inflation rate month over month went up 0.4%. So you are expecting a slight deceleration in core CPI month over month. Now, headline CPI month over month, you're expecting that to go up 0.4%. Last month in December, it went up 0.1%. And a lot of this is fueled by food and energy, right? That's the only difference. Core inflation rate is everything that CPI has minus food and energy. So the very volatile sectors being food and energy. Now, you're expecting a big increase in the headline inflation rate month over month, whereas you are expecting a deceleration in core inflation. I personally find it hard to believe you're going to see a huge move up in the headline inflation rate month over month, but see a drop in core month over month. Now, that's not to say it's not possible. I just think that's very unlikely, but that's what the markets are pricing in. And if both of these are higher than expectations, the core CPI month over month, as well as the headline CPI month over month, that is not going to be a good thing. And that could make for a very volatile week. We'll just call it that. The markets could absolutely plunge. Now, for an example here, the headline inflation rate month over month came out at 0.1%. Like I said, for the month of December, that was last month. That is 1.2% on an annualized basis. 0.4% on an annualized basis is almost 5%. That's what kind of difference these numbers are. So if markets start to expect, that this headline inflation number going up is going to feed into core inflation going higher, it's not going to be a positive thing. So that's going to be the big event coming on Tuesday, really the biggest event for this week. Now, after that, at 11 o'clock in the morning, you're going to get Fed Logan that speaks, and then Fed William that speaks at 2:05, and that's going to do it for Tuesday. Now, the inflation numbers coming in at whatever they're going to come in at, that's one thing, but Fed commentary will also be very important because it's kind of going to give you a feel of how the Fed is perceiving this inflation report, right? Does that mean they have to go higher for longer? And personally, let me just be 100% with you guys up front, straightforward. I think the Fed already knows inflation is going to come in higher than expectations. That's why last week you see Fed Jerome Powell, Fed Kashkari, Fed Bostic, Fed Bowman, literally all of these Fed speakers, Fed Mester, they're all saying the same thing. Basically out of thin air. A couple weeks ago, they were not saying any of the stuff they're saying now. they're starting to say that the terminal rate will have to go higher. And for those of you guys that are unfamiliar of what the terminal rate means, that is the highest the Fed is going to take the federal funds rate before they start cutting rates. So we expected the Fed to raise rates to 5% by the end, really by the middle of 2023, to hold those rates there for a while and then to start cutting in 2024. The market, well, that's what the Fed has said they're going to do. The markets have been expecting a cut by third quarter of 2023. Now they're starting to push that back closer to 2024. Nonetheless, this inflation report is going to kind of, dictate Fed policy and could really upset the markets, or on the flip side, could make the markets positive. Now, I will say the biggest positive we have going for us is we are expecting a big increase in inflation, right? You're expecting a big increase in headline inflation month over month from 1.2% annualized to almost 5% annualized. That's a big jump. If it comes in at, say, 0.3%, 0.2%, that's better than expectations. Same thing for the core inflation rate month over month. I'm more concerned about that one just because it's not, supposed to, in quotes, go up like the headline inflation rate. And I think there's a very low likelihood that headline inflation goes up this much month over month and core inflation continues to go down month over month. I find that hard to believe, although it is a possibility, and that would be the best case scenario if core CPI does continue to go down. Now, coming on Wednesday, you're going to get retail sales month over month. For December, you've seen a negative 1.1%. For January, you're expecting a positive 1.2%. So that would be like the worst case scenario. If retail sales go higher by 1% month over month, and the inflation rate goes higher as well, it's going to show people are spending money. It's going to show that inflation is going higher. That's not what the Fed wants to see. Again, that will be coming at 8:30 in the morning. And that's pretty much going to do it for Wednesday. Now, on Thursday, you're going to get building permits. I don't expect that to be big at all. But PPI, the best way to think about this is producer price inflation. It stands for Producer Price Index, but it's the reading of inflation for producers. Last month, this came in at 0.1%. This month, you're expecting it to come in at 0.2%, or should I say January's number at 0.2%. Again, another increase to the overall inflation numbers. Now, initial jobless claims will also come out Thursday at 8:30 in the morning. You're expecting 198,000 initial jobless claims, up from about 196 last week. So you're expecting a 2,000 increase to the initial jobless claims. Worst case scenario for the markets, at least, if this initial jobless claims number comes in at like 180,000, 170, or 160, or 150,000, it's going to show that the consumer's doing okay. People are not getting laid off yet. And that's one of the things that these Fed speakers have been reiterating is we need to see labor market conditions contract, whether that is people losing their jobs or job openings decreasing. The Fed has very clearly said that you don't necessarily have to see people lose their jobs as long as the job openings go down, right? None of those have been happening as of yet. Now, you're also going to get at 8:45 a.m. on Thursday, Fed Master that speaks, and then you're going to get a lot of ECB speakers as well. That could also be important. And you get Fed Bullard that speaks at 1:30 p.m. I didn't see that last time I went through here, so that one will be key as well. And then at 6 o'clock, you get Fed Master again. And then on Friday, you're not going to get too much. Fed Barkin that speaks at 8:30 in the morning. Import and export prices year over year, but at this point, come Friday, I think markets are going to be, trying to digest all of the information that we already just got. Now, you are also going to get earnings. Now, you're going to get a lot of kind of second tier earnings, right? You're going to get a lot of small and mid cap company earnings, and you really just want to watch the certain sectors, right? Certain sectors or companies that can be bellwethers for their sectors will move the markets. For an example, Snapchat was the first advertiser to report. It brought down Google, it brought down Facebook, it brought down a lot of other companies based off of Snapchat earnings alone. So do keep that in mind. I don't have a full breakdown as of right now for you guys, but that's what we have in store for this week. Now, as far as Tesla stock has went up a lot as of recently. And this is really because of a short squeeze. You have almost $20 billion currently sold short in Tesla stock. So when you have numbers like that that are so high, it can give you a short squeeze, even though Tesla's short interest is only 3%. Now, if the inflation comes in better than expectations, I do think you will see a continued rally in Tesla, especially as a lot of those demand concerns were way overblown. This is the best demand that Tesla's ever seen to start a new year. That means something, and that means Tesla's probably going to 300 a lot quicker than it's going back down to 100, right? So I do think there is a lot of potential for an upside move still in Tesla stock, but it's all going to depend on how the data does play out for this week. And you guys can see, just look up Tesla stock news on Google. You're going to see a lot of articles about the Tesla short squeeze, and a lot of people are positioning for the Tesla event coming in the very short-term future. Now, the largest U.S. pension also buys Apple, Tesla, and Disney stock. It sold Walmart, and you're going to start getting a lot of 13F filings coming out. And if you see big-time investors like Warren Buffett or other investors starting to buy Tesla and starting to buy other names, it's going to be a very good sign. If you start to see a lot of selling, well, that's not going to be such a good sign. So there you have all of that information. That is the meat and bones of this video. Now, as far as where Tesla could go for this week, I think you could test easily the 180-250 level on a downside move if you get a bad inflation report. Now, if you get a good inflation report, it could very easily be a move 230, maybe 250, right? If you get a outlandishly bullish inflation report, because again, markets are expecting inflation to have went higher in the month of January. If it did not, if markets and analysts have that wrong, it's going to be a very positive thing for the stock market, guys. That is going to do it for this video. Hit that like button and subscribe to the channel. But most importantly, let me know down below in the comment section, who do you think is going to win the Super Bowl, baby? Thank you for watching, and I will see you in the next one.